Have you ever wondered how people make money from stocks? Or why the news says the stock market crashed today? If you've always wanted to understand the stock market but found it confusing, this video is for you. By the end of this video, you'll understand what the stock market is, why companies sell shares, how investors make money, the risks involved, how beginners can start investing. Let's begin. What is the stock market? Imagine your friend starts a pizza business but needs 10 lakh rupees to expand. Instead of borrowing from a bank, your friend decides to divide the company into 100,000 small pieces called shares. If you buy one share, you own a tiny part of that business. Now, imagine thousands of companies doing the same thing. The place where these shares are bought and sold is called the stock market. Simply put, the stock market is a marketplace where ownership of companies is traded. Why do companies sell shares? Businesses need money to open new stores, build factories, hire employees, develop products. Instead of taking loans and paying interest, companies raise money from the public through an initial public offering or IPO. Example, a company worth 100 crore rupees sells 10% of itself. Investors buy those shares. The company receives money to grow. Investors become partial owners. It's a win-win situation. What makes stock prices go up or down? Stock prices are determined by supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell, the price falls. But what changes demand? Several factors: company profits, new product launches, economic growth, interest rates, government policies, global events, investor emotions. Sometimes prices rise because people are optimistic. Sometimes they fall simply because investors panic. How do investors make money? There are two main ways. One, capital gains. Suppose you buy a share for 100 rupees. A year later, it's worth 150 rupees. You sell it. You've made a 50 rupee profit. This is called a capital gain. 2. Dividends. Some companies share a portion of their profits with shareholders. These payments are called dividends. Even if you don't sell your shares, you can earn regular income from dividends. Not every company pays dividends. Many growing companies prefer to reinvest profits into expanding their business. What is a stock exchange? A stock exchange is where buyers and sellers meet. In India, the two major exchanges are BSE, Bombay Stock Exchange, NSE, National Stock Exchange. Companies list their shares here. Investors place buy and sell orders through brokers using mobile apps or websites. Modern trading happens electronically in just fractions of a second. Risk versus reward. Many people believe stocks are gambling. Not exactly. Buying random stocks without research is similar to gambling, but investing in strong companies for the long term is very different. Historically, the stock market has grown over decades, despite short-term ups and downs. However, risks always exist. Prices can rise quickly, fall sharply, stay flat for years. That's why successful investors diversify their investments instead of putting all their money into one company. How beginners can start investing. If you're new, step 1, learn the basics. Step 2, open a demat and trading account. Step 3, start with small amounts. Step 4, invest regularly. Step 5, think long-term instead of trying to get rich overnight. Avoid chasing social media tips or investing purely because everyone else is buying. Always understand the business before investing. Conclusion. Let's quickly recap. The stock market is a place where people buy and sell ownership in companies. Companies sell shares to raise money. Investors earn through capital gains and dividends. Prices move because of supply and demand. While investing carries risks, long-term investing in quality businesses has historically been one of the most effective ways to build wealth. Understanding the stock market isn't about predicting tomorrow's prices. It's about understanding businesses and giving your investments time to grow. If you found this explanation helpful, consider subscribing for more beginner-friendly videos on